follow this very closely so that you don't get lost at any point. Now, I normally say that any well-run organization must have what we call financial, maybe we call them books of accounts, or they must have a financial accounting system. Now, this one we are all very familiar with, and companies will mostly use this to record, say, their sales or their revenues. They will also use this to record, we can say, their purchases. You know, this is where they will record their expenses and other costs. And then they can be able to even determine their profits. Okay, they will also maybe use these accounts to record their assets as well as their liabilities, so that in addition to reporting on profitability of the company, they can as well be able to report on the financial position. Financial position of the company using a statement of financial position, if you like, a balance sheet. Now, some organizations, in addition to maintaining a financial accounting system, they may also find the need to maintain what we call a cost accounting system. A cost accounting system. Now, this cost accounting system maintained by this organization will mainly, or their main purpose is to help them determine their cost of production. I'm assuming maybe this is a manufacturing company and they're manufacturing a certain product, but they need to know what is the cost of production for this particular product that we are producing. So we can say that in addition to maintaining the financial accounting system, they might find it necessary to maintain a cost accounting, system as well, which will now be able to capture, the cost of production for the particular product that they are dealing with. Now, that is why we want to look at today what we call cost bookkeeping. Now, in cost bookkeeping, there will be broadly two systems, or mainly two systems. So we can say the first system, I will call it the integrated system. The integrated system of accounting. Now, under the integrated system of accounting, it means that both the financial accounts and the cost accounts will be maintained as one. In other words, there will be no division between the financial and the cost accounts, and so a single set of books of accounts will be maintained. So we are saying that a single set of books of accounts will be maintained. So we call it integrated. It means that no division is made between the financial books and the cost accounting books, and we will maintain one set of book of accounts. Now that is called integrated. It's one of the bases of maintaining the cost accounts. Now, another basis or another system will be what we call an interlocking system. An interlocking system. Now, in this case, the financial books or the financial accounting books and the cost accounting books will be maintained using two separate sets of accounts. So we will have two separate or distinct sets of accounts. And in that case, once these are prepared, since the financial accounts may give a different profit from that of the cost account, we may have the need to do what we will call in our next class a reconciliation, so that we can bring the financial accounts or financial accounting profit and the cost accounting profit into agreement. Now, our focus today will be this: the interlocking system of accounting, where the cost books and the financial books of account are maintained as separate sets of books of account. And our emphasis will be how then do we maintain the cost books of accounts? How then do we maintain the cost books of accounts? Now, let me try and introduce that. And to be able to understand or to appreciate this topic better, you need to, number one, review your knowledge of material costing. And I will tell you why your knowledge of material costing is important, which we studied under cost accumulation. Two, it will also be important for you to review again your knowledge of labor costing. And lastly, it will be important for you to again review your knowledge of overheads. Now, these ones, we referred to them under classification of cost, we referred to them as elements, or the three principal elements of cost. So when you're determining your cost or the cost of a product, you must be able to know what is your cost of material. Number two, you must be able to know what is your cost of labor. And number three, you must be able to know what is the cost of overhead. Now, under cost bookkeeping, there are quite a number of accounts that are maintained. But for now, I just want to concentrate on these three accounts. And from these three accounts, you can be able to develop further or be able to work out the rest of the accounts up until you determine the costing, profit, and loss account. So my objective today, therefore, will be to see that we are all very clear as far as maintaining that material account is concerned. Again, I want us to be very clear as far as maintaining the labor cost ledger is concerned. And I also want us to know how do we prepare accounts for the different types of overheads. So you have to just know these three accounts, and I will give one more so that we will have to now come up with an account that will complete the double entry for these three accounts. Now, all transactions involving material, and follow me closely, this is what you need to know to answer any question on cost bookkeeping. We are saying all transactions involving material will be recorded in what we call a stores ledger, control account. So all transactions involving material will be recorded in what we call a stores ledger control account. And mainly there will be two transactions here. I will call them two because it's number one, we are purchasing material. So when you purchase material, then you will record them in this account, which I'm calling the stores ledger control account. I will be showing you the double entry, but because this is an asset account, when assets increase, we debit. So when we purchase material, then our assets have increased, so we will debit that account. And the other transaction involving material will be the issue of material. And we could be issuing either to production. I will tell us how to record that. We'll be issuing indirect material, so maybe to production overheads. I will also show us how to record that. And we can also issue as far as admin issues are concerned. But I want you to just remember that as far as material is concerned, we will have two entries that we purchase and then we issue. Now, that will help us prepare account for material, which I've called the store's ledger control account. Number two is labor. All transactions involving the payment of labor will be recorded in what we call a wages and salaries control account. Wages and salaries control account. So there will be two transactions again here. One will be the payment of wages. So when we pay wages, we record them in this particular account, which I've called the wages and salaries. I've combined wages and salaries into one account. And when we make any payment, we record it in the wages and salaries control account. And of course, that will be a debit entry, as we will be able to see. Then we must allocate these wages. We must allocate these wages. So they will have direct wages, which I will show us where they go into a work in progress account. We can have indirect wages. We can have wages for admin staff. We can also have wages as far as selling and distribution is concerned. And lastly will be overhead account. So we will have what we call an overhead control account. An overhead control account. There'll be several categories of overhead. We classify them according to function. So we will have overheads that relate to production. So we have production overhead control account. Overheads relating to admin. So we have admin overheads control account. Overheads relating to sales. So we have selling and distribution overhead control account. And again, two entries that you need to remember. One is when the expenses are paid for. So we will have payment, so we debit this account, and then we credit the financial ledger account, which I will introduce here as the number 4 account. And lastly, we will have absorption. So for overheads, you pay, and then we absorb. For labor, we pay, and then we allocate. For material, we purchase, and then we issue. So those are the 3 accounts that are a must know if you are to prepare what we call cost books of accounts. Now, all these accounts, we have to complete their double entry, and the double entry will be completed in the account here, which I will call the financial ledger control account. The financial ledger control account, which is now the account that interlocks the financial account with the cost account. So we will have material, labor, overheads, but the double entry for those 3 accounts will be completed in what we call the financial ledger control account. So I want us to jump into an illustration from the past paper that will help me explain in further detail the transactions that we have captured here, those ones relating to material, those ones relating to labor, those ones relating to overheads, and those ones relating to the financial ledger control account. I hope we've all been able to capture that. So that will be a good summary of the accounts that are a must know. Out of this, we'll generate other accounts, but for now, okay, to avoid confusion, I just want you to master those 4. With these 4, we can be able to develop the rest. Okay. Okay, Harvey, you can be able to hear, or Haley? Confirm that we are together before we go into an illustration now. Okay, we are together. All right, if my sound is clear from your end, then we can proceed. So let's go to November. Was it November? I had sent you that illustration on the group. That should be 2018 November question 3. 2018 November question 3. 2018 November question 3. So we move very slowly so that we prepare these accounts. And I give you an assignment on the same. And we can call it a lesson. So allow me to read for us question 3. So we have Keys Limited. Keys Limited. We manufacture a single product branded Zuri, whose standard cost card is given below. So we have the selling price per unit, the direct materials, the direct labor, the fixed overhead, and then we have a total cost. Some additional information. 1, we are told that as at 1st October 2018, the opening balances for the cost ledgers were as follows. So those will be your balances brought down in the material account, in the work in progress account, and in the finished goods account. Now I'll be showing us how to prepare those 2 other accounts that I have not explained. Then 2, we have the following transactions took place during the month of October 2018. So we have direct material purchases, then material issued to production. So you can observe that there is material purchased and then material issued. Now we're only issuing to production. Then again, we have direct labor paid and indirect labor paid. So that can help us write the wages control account. So it's not required, but we will still write it. Then we have what we call the production overhead costing card, or those are what was paid as far as overheads are concerned. And we had sales, 650,000, and the goods that were transferred to finished goods stock were amounting to 385,000. As at 31st of October, that's the close of the month, closing balances were as follows. So we have material, work in progress, and finished goods. Material, work in progress, and finished goods. And you are required to 1, write a direct material control account. Then we have the work in progress control account. Next is finished goods control account. And we have a production overheads control account. And then a statement showing the profit or loss, which will write a costing profit and loss. Now, as we begin, I want you to help me write an opening trial balance. So everybody now, let's write an opening trial balance based on the information that has been given in note 1. In note 1. So am I able to write here? So I'm writing an opening trial balance. Opening trial balance. Opening trial balance. So we have the debit side and then we have the credit side. Now, direct material, I want you to start with direct material. Start with direct material. And these are the balances. And direct material will have an opening balance of 15,000. Then we have work in progress. Work in progress, that will be 120,000. Lastly, we have finished goods. Finished goods. Now, finished goods, they have a balance of 72,000. Finished goods, the balance is 72,000. Now, as when we are starting, the debits must be same as or must be in balance with the credits. And we've said the account that completes the double entry for all these is called the financial ledger control account. So I want you to add here and say what is the balance therefore in my financial ledger control account. So that will be a credit balance. That will be a credit balance. So give me the total of this. Give me the total of 15, 120, and 72,000. Somebody add that and type there your answer on the chat. What do we get? Very good. We have 207,000. So this side must also balance with 207,000. And so the financial ledger control account will have a credit balance of 207,000. Everybody clear on that? Because I want to do the whole double entry for that question. So 15, add 120, add 72. All those are assets. So we have debit balances amounting to 207, and the credit balance goes to financial ledger control account. Financial ledger control account. We okay with that? Very good. Very good. So let's then now write up opening balances in all these accounts. We have these accounts for material. We have an account for work in progress. We have an account for finished goods. We have an account for the financial ledger control account. If you would have these accounts and then get the opening balances in each one of those accounts. So let me wrap this so that I have enough space to write that. So I will remember that we had a 207, a 207. So write your T accounts. I hope we are able to read this side of the board. Go lower than this. Is it too low? So let's have our direct material control account. Direct material control account. And then we can have our work in progress control account. And then we can have our finished goods control account. Finished goods control account. This is debit, credit, debit, credit, debit, credit. Then we have our financial ledger, control account, debit and credit. So let's bring down the balances. So we have the opening balance. So you say balance brought down. The balance brought down in this account is 15,000. Then we have the balance brought down in this other account for work in progress control account being 120,000. And then we have finished goods. We have balance brought down of 72,000. And finally, we have on the credit side a balance brought down of 207,000. Now, everybody knows where we got the 207,000 from the opening trial balance. So if you are okay up to that point, I can proceed so that I write or I show us how to write the material account. If you like, you can call it the store's ledger control account. So you can also call it the store's ledger control account. You can call it the store's ledger control account. Now I said this is a must-know account, how to prepare this one, and it will only involve two transactions. One is when we purchase material, we debit this account, and then the double entry, complete it in the financial ledger control account. Again, when we issue material, it means the materials have decreased or your assets have decreased. So when you issue, we say, depending on is it direct material or is it indirect material. For direct material, we will record it we will credit the material account, and then we take this one or the debit entry to the work in progress, which we call our production account. This is the account that helps us to determine what is our cost of production. So eventually you will see we will have the cost of material here, the cost of labor, and the cost of overheads. So that is the work in progress account. But my focus now is only the material account. So now let's record the purchases. I know we all have the what? The double entries that I gave to us, but I just want to reason it out that when material increases, we debit. When material goes out, we credit. I repeat that. When material comes or is purchased, we debit this account. When we issue, we credit this account. So let us enter the first transaction. Everybody look at note 2. Note 2, we have direct material purchases of 89,000. So I will come and debit this account. So the corresponding account is the financial ledger. So I write the name of the other corresponding account. I'm sure that is what you do in double entry. So I say this is the financial ledger and specifically purchases of material. So purchases of material, the amount was 89,000. So debit your account with 89,000. But every debit entry must have a corresponding credit entry, which is the account I've said complete the double entry. For the cost books, we've called it what? The financial ledger control account. So I want you to come and credit these accounts. So we say direct material, and this is specifically for purchases amounting to 89,000. Amounting to 89,000. So I hope that transaction is clear. Purchase of material, debit the material account or the stores ledger control account, and you credit the financial ledger control account. Double entry must be complete. Now, then we have note 2, materials issued to production. Materials issued to production. So when we say material issued to production, then you're saying that is going to the work in progress control account. Okay, so that is direct material that we are issuing. So we say to work in progress, and this is specifically the direct material. If it was indirect, I would have taken that to the production overheads control account. But now this is issued to production, which is direct material, and so that goes to work in progress. How much was it? That was 90,000. 90,000. So we'll come into these accounts and say direct material. Direct material, 90,000. Direct material, 90,000. 90,000. And since we do not have any other account relating to material, then now we can close the direct material account. And you've already been given in note 3, the balance carried down in that account, the balance carried down in that account. So we say on the credit side, we say our balance carried down has been given as 14,000, which is 89. Add to 15, subtract 90, what you issued. So does that give you 14,000? Check if that gives you 14,000. Okay, it does. And then this balances very well at 104,000. And this is 104,000. So that you must bring down your balances so that you have balance brought down of 14,000, and that is what you will take to your closing trial balance. Closing trial balance. Now, I want to see if everybody is clear about how we've prepared the material account. I said my objective today is that you can prepare a material account, you can prepare a wages account, and you can prepare an overhead account. So I want to know, is it clear how we prepare a material account? If there's a question, anywhere you are lost, as far as writing the material or the stores ledger control account is, you can ask for clarification. So you needed that for part A of the question. That is how you get your 3 marks. Any question? Any question? We are all clear on what I've done? Tina, are you okay? Lillian, are you fine? Harvey, are you okay? I've just purchased and then I have issued. Okay, I am okay. Tina says, for now, I am fine. Okay. There will be no point that you will not be fine. So very basic entry here. We've said you purchase material, increase by debiting, and then you issue, you credit. Purchase and issue, but you must know where the issue goes. The issue, because this was direct material being issued, we take it to the work in progress account. Work in progress account. Now, number two, I want to show us how we write a wages control account. A wages control account. A wages control account. Okay, we'll still come back to work in progress. We'll come back to finished goods. We'll come back to the production overhead account. For now, I want us to write the wages control account. It has not been asked for, but I still want to show us how to write that. So let's have another account here. So debits, so we call this wages control account. Wages control account. Again, we've said for wages, you pay and then you allocate. Material, you purchase and then you issue. Wages, you pay and then you allocate. So I want you to tell me, what was the total amount of wages paid? We have 102 and we have 56. So in total, that is how much? In total, 56 and 102. All those two transactions relate to wages. So add them, that will give you a total of what? 158, 158. So the same thing we did for material, we do that for wages. So we pay, we debit the wages account, and then we credit the financial ledger control account. So I want you to come and say wages. That's a cost to us. So when costs go up, we debit. So we are saying wages Sorry, I should have said the name of the other corresponding account, which I will say financial ledger. And this will be the wages that were paid in total. In total, we have 158,000. We have 158,000. Don't forget to pass the double entry. You come and say wages. This is what was paid. Wages paid is 158,000. 158,000. I hope that transaction is clear. $158,000. Okay. Now let's come to the allocation of the wages now. Tell me, what is the amount of direct wages, direct labor paid? Out of this 158, 102 is for direct wages. And all direct costs, we've said we take them to which account? To the work in progress. So that we can be able to determine our cost of production. Production, we've said, must have material, labor, and overheads. Must have material, labor, and overhead. So I want to start with the direct wages. So we say direct wages will go to work in progress. Direct wages, that is 102. 102. So we come to this account and we say direct wages. 102. Direct wages 102. Direct wages 102. Is that clear, everybody? When we pay, debit and then credit. And which account are we crediting? Financial ledger, which completes our double entry. Okay, then we say, when we now allocate, for this account we've said you pay and then you allocate. So let's allocate the indirect wages. Who can tell us the indirect wages? That's an overhead. Will go to which account? Any good guess? We have direct, I've taken to work in progress. What about the indirect wages paid? It will go to which account? Any good guess? Production overheads. Very good. Very good. So let me open a production overhead control account, which I did not have here. So come and open a production overhead control account. So we have debit side, and this is production overheads control account. Production overheads control account. So we say production overheads in this account, and those are the indirect wages. They're amounting to how much? 56,000. 56,000. And so I come here and say wages, specifically indirect wages. And the amount is 56,000. The amount is 56,000. 56,000. Is it clear up to that point? Notice that that account closes itself. So this account is also done. So 158 158,000. 158, 158. So what have I done? I have paid wages and then I have allocated the wages. Those ones that are direct, I take to work in progress. Those that are indirect, I take to production overhead. Now you know how to maintain two accounts. Material and labor. So tell me if you are all clear up to that point. Waiting for a question on how do we write a material account and how do we write a wages control account. Any question? Looks like we are all okay as far as maintaining those two accounts is concerned. We are not in a hurry today because I want you to understand how to write a material account, how to write a wages control account, which I think now we are very clear. And then lastly, we can now write the production overhead control account. The rest will now be to just close the account. So if you have a question, just ask, how do we write material account? Purchase and issue. How do we write a wages account? Pay and allocate. And then we finish with production overheads control account. So are we clear up to that point, guys? Christine, Lillian, Heavy, and Omar, are we okay? Okay. Okay, guys are okay. Cecilia is okay. So I think we can proceed now. Now, I've shown you how to write a material account. I've shown you how to write a wages control account. I've also shown, now I want to show you, I have not shown you, I want to show you how to write an overhead account, whether it is for production, or it is for administration, or it is for selling and distribution, the approach is the same. Okay? So we first look at what was the amount of production overheads incurred or paid for. So again, the same thing we have done. This is the account to complete the double entry. When we purchased material, we debited this account and credited here. When we pay labor, we debit this account and we credit this account. Same case for overheads. When we pay overheads, we debit this one and we credit this one. So look at the production overhead cost incurred, which was 159,000. So we pay overheads, so we will debit this, credit this account and debit the production overhead control account. So let's do that. So we say financial ledger. These were the expenses paid or incurred, which amounts to 159,000. 159,000. Then we come here and we say production overheads. Production overheads. And the production overheads are at 159,000. 159,000. 159,000. So is that transaction, that entry? I hope it's clear. I hope it's clear. Now, the rest is just to close these accounts. I want you to follow me closely. As we try and close, then we can finish at that. Now, here we have production overhead control account. It has captured the actual amount of overheads that were incurred, both from expenses that were paid for and the indirect wages. So this account for production overheads should be closed to the work in progress account. Because we've said elements of cost are material, wages, and overheads. So the only thing that is missing in this account is the production overheads that were absorbed. Is the production overheads that were absorbed. So allow me to write that. However, I don't know how much they were. But because I have details for this account, I can be able to work backwards and be able to determine what were the amount of overheads that were absorbed to this particular account. So I want us to say here now, we say work in progress, and these are overheads that were absorbed. Now, put a question mark because we don't know how much they were. Other questions, they will be able to tell you. For this particular one, we are not told. So it's an incomplete kind of accounting, but we can work backwards and determine this particular figure. So I will come here and say, these are production overheads. Production overheads. Production overheads, but I put a question mark. Okay, I don't know how much or how many they were, but I know the closing balance in this account, and I know what was transferred to finished goods. So see the flow. The flow is from production overheads, it goes to the work in progress. From the work in progress, it goes to finished goods. So this is the cost of work being done. However, it's not everything that was complete. There'll still be some incomplete units at the end of the period here. But what is completed from the work in progress is transferred to the finished goods control account, which I have been told. So let me see, somebody read for us how much was transferred. We are told the goods transferred to finished goods stock. How much were they? Read note 2, note number 2. Everybody is reading so that I don't leave anybody behind. I have the goods transferred to finished goods stock, or the cost of goods that were transferred to finished goods stock. Read for me, they were how much? I can see the figure. I hope you can also see it under note 2. How much were they? Very good, 385,000. So out of this that we produced, what was completed was, so we say to finished goods. So this will be finished goods. Finished goods, 385,000. 385,000. Complete the double entry, so you credit this account and you debit the finished goods. So you say work in progress, 385,000. 385,000. I hope is clear for everyone. I've said, let me repeat, production overheads, you close it to work in progress. But we don't have that amount. So I've just put a question mark there. If I had the exact amount, I would have brought it here. But now I will work backwards and be able to get it. I know from this account, the cost of work done, that what was completed was amounting to 385. And what is completed, I send it to the finished goods control account. Now, you've also been given the closing balance in that account. You've been told this account had a balance carried down. What was the balance carried down in this account? Somebody? Look at note 3. What is the balance carried down? What, 135. So we have a balance carried down of 135,000. Very good. Very good. So tell me, if we have a balance carried down of 135,000 and we have finished goods cost of 385, then the balancing figure is now the production overheads. So tell me, what is the balancing figure? Sorry, what is the balancing figure in that account so that we can have this account balance? So I said now it's just closing off the account. Everybody trying to get the closing balance, not the closing balance, but the production overheads. So total here is 502,000. So this one must also give me 502,000. 502,000. So what's the balancing figure? What is 190? So we say the balancing figure here is 190. Okay. So the balancing figure there is 190. Everybody knows or is able to see how we've gotten that figure? We've just taken 120, added to 90, added to 102, we got 312. And then 312 we subtract from 502. And that gives us 190, 190. So remove your question mark there now and put in place 190, 190, so that you have here in the production overhead control account, you have 190, 190. Okay, is that clear for everybody? Okay, somebody says it's 520. This is 520, not 502. This is 520, 520. So what will be my balancing figure? Does it change from 190? 120 plus 90 plus 102. And then I subtract 520. So that should be 208. Very good. 208. So this should give me 208,000. So wrap the 190, in its place we put 202. So I wrap 190 and I put 208. 208,000. 208,000. So is that clear now? So we already have our work in progress control account, which the examiner wanted again. We have the direct material account, okay, and we now have the production overheads account, the production overheads account. Any question up to that point? So is it 190 or 208? I think it's 208. Tina, please confirm. Tina, is it 190 or 208? She says it should be 190. I guess it's 208. This one we've changed from 502 to 520. Okay, we are adding 385 to 135. When we add 385 to 135, how much do we get? Is it 520? Heavy is asking how. I'm trying to explain that 385 plus 135 is 520. Is that clear? Then when you add these three, they give you 312. 312. And 312 subtract from 520 should be 208. Is that okay now? Okay, good. If it's okay, we can now try to conclude. Now let me come to how we close the production overheads control account. Production overheads control account. We have wages, indirect wages paid of 56. We also have expenses incurred as far as production is concerned for 159. So the actual is 159 plus 156. What does that amount to? What is 56 plus 159? Okay, 215. So we have 215 here. We have 215 here. And if all the overheads that were incurred were absorbed, then we should have absorbed overheads equal to 215,000. So this is the actual, 215, 215. However, we only absorbed 208. So was there an over or an under absorption? Somebody tell me, did we under or over absorb? And by how much? Yes, there was an under absorption. So we have an under absorption of how much? 215 minus 208 will give you 7,000. Now I can take that amount directly to my profit and loss account, okay? Because it's an under absorption. If they were several, if I have production, admin, and selling and distribution, I can take them to an account I call overhead adjustment. But since it is only one, just take it to the costing P and L. So costing P and L. This is under absorption of 7,000. So you will remember when you are writing the costing, profit and loss, we have an under absorption of 7,000. And so that I don't forget, let me write it right away. So we say costing, P&L, costing, profit and loss account. Costing, profit and loss account. Okay, costing, profit and loss account. Of course, we will have the sales, the cost of sales, but then we have another what? Another cost here, which had inflated our profit or would inflate our profit. So we debit it here, credited here. So I debit this account and I say under absorption. So this is production overhead, and that is under absorption, under absorption. And the under absorption is for 7,000. 7,000. Let me know if it is clear up to that point. It can still be seen here. Everyone sees how we got the under absorption and where I've posted it to? So we had actual overheads of 215, but what went to the production overheads is 208. So it leaves us with an under absorption of 7,000, which you take to your what? Profit and loss account, because it's only one. Okay, if there were several for production, admin, selling, I would have combined all the three, then taken the net amount. So if that is clear, okay, the only account that I now want to close is the finished goods control account. Finished goods control account. Now, from the finished goods control account, we now take this to the cost of sales. I will repeat that from the finished goods, now we go and sell. But this gives us the cost of goods that we are going to sell. We didn't sell everything. So it is part of what was finished that we went to do what? To sell. So I want us to say that the balance carried down in this account is how much? What is the balance carried down in the finished goods control account? Somebody read for us and type there. What is the balance carried down in the finished goods control account? 54. So this is 54,000. 54,000. So then what is the cost of goods sold? The balancing figure. Okay, so you take that to the cost of sales. Cost of sales. Give me the balancing figure in that account. What is the cost of sales, somebody? It's the balancing figure in that account. 403. So we say this is 403,000. So that it balances with what? What is 403 plus 54? 457. 457. And 72 plus 385 again is 457. So remember to bring down your balance. So you have balance brought down of 54. I also had a balance brought down in the work in progress. So I will not forget to put that down. I have just brought the balance down here. I also needed to bring down this balance of 135 in the work in progress account. Okay. So let me open a cost of sales account. Some of you can just bring it directly to the costing profit and loss, but I can complete a double entry by having the cost of sales account. The cost of sales account. The cost of sales account. So cost of sales account has come from finished goods. So these are finished goods 403. 403. So everybody is clear about that. We have 403 here, and I have brought it to the debit side of my cost of sales account, which is 403. And 403 was the balancing figure in the finished goods account. So from the cost of sales, now we transfer it to the costing profit and loss. So we say costing P&L, which is 403. Costing profit and loss, which is 403. So this closes down like that, and it balances out like that, so that I have the cost of sales here. Cost of sales of 403. Cost of sales of 403. I hope that is clear. I will repeat. From the finished goods, I have brought it to the cost of sales. From the cost of sales, I've closed it to the costing profit and loss account. So I hope all those transactions are clear. And the last one is now the sales. Sales were for how much? Look at note 2. What was our sales? Our sales from note 2 are at 650,000, correct? So you can bring it directly to the profit and loss account, or you can open a sales account so that you complete the double entry. And so that is what I will choose to do. So I open my sales account here so that the double entry is very complete. Okay, so this is the sales account. We have a debit and we have a credit. So when you sell, we credit sales, and then the double entry must go to the financial ledger control account. I hope that's clear. You know that sales account has a credit balance, so we will say here, financial ledger, sales of 650,000. Sales of 650,000. And then here we can say sales 650,000. Hope that is clear. When we sell, credit sales account, double entry will always be completed in the financial ledger account. Then now let's close the sales account to the costing profit and loss account. So we say costing P&L, which is 650,000, 650,000. And then I have my sales here. So my sales are for 650,000. And this account closes out like that. So that's what I was saying. You could have just brought the sales here immediately. But it's good to just complete the double entry so that you're able to show that when I sell, I credit this, I debit this. And then I transfer the sales to the profit and loss account by debiting sales and crediting the costing profit and loss account. And now we can get our profit. So somebody tell us, what is our profit from this account? So 650 less 403 less 7,000 will be your profit. And that is what they now want us to answer in part D of the question. Part D of the question. Where we are supposed to create a statement. So what will be our profit? Give me the balancing figure in that account. This should be 650. So I should have 650 here. So this should be profit since the credit side is bigger than the debit side. And the profit is 240,000. 240,000. Everybody getting that? Everybody getting 240? So notice that the only account we've not closed now is the profit and is the financial ledger control account. So let's transfer this profit there. The profit of 240. Either you can just come open a profit account and then transfer it here, but let's transfer it here immediately. The profit and loss account here, the 240 is on the debit side. So we come and credit here and say P and L. And this is the profit. And the profit is 240,000. That's our last entry. Now determine the profit. So close this account and tell me what's the closing balance in the financial ledger control account. So get me the balance carried down. So simply close this and this account. What is the closing balance in your financial ledger control account? Okay, this is 203,000. So that it closes with 853,000. So we have a balance brought down of 203,000. So I want to know if there is any question. Any question on how we write any of these accounts as we come to a close? Maybe what I can ask you to do very quickly is to write for me a closing trial balance. So write a closing trial balance so that you have material 14, work in progress 135, finished goods 54, and then financial ledger 203. And tell me if it is agreeing as we come to the close. We had an opening one. Now we can prepare a closing one. Try and prepare a closing one. And tell me if it is agreeing. Yes, Tina, you have a question. Ask. What's the question, Tina? You can type there, we'll be able to see. And she asked that, let's write that closing trial balance here very quickly. Okay, closing trial balance. So again, this is the debit and this is the credit. So I will start with direct material, and direct material is 14,000. Then I have work in progress. Work in progress is 135. And then I have finished goods. Finished goods is 54. And then I can have the financial ledger. Financial ledger with 203. So tell me, do these two agree? So this is 203. What is the total of 14? 14, 135 and 54. 14, 135 and 54. What do we get? Okay, Tina says she has seen the answer. So now she has no question. 14, 135, 54. And this should also give me 200 and what? 203. I had not been asked to prepare this. I had also not been asked to write the financial ledger as well as the wages control, but I just wanted to show you the flow of cost in all the accounts, even the ones that have not been asked for. So that would be good. Unless there is a question, can we end the class at that? So that you go and do the other question as an assignment. Then we can compare our answers tomorrow. So everybody